What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with another IMBI update. But before we start, if you haven't done so already, please subscribe to the channel and hit that like button so that we can get this information to as many people out there who want to learn about the trade. With that said, let's begin. Okay, so I know the chart looks a little bit saturated here, but it's with good reason. The first video uploaded on IMBI was actually supposed to be last night. Unfortunately, there were internet issues. I did, however, upload the video today, just a couple hours ago. So if you want to go ahead and check out what I mentioned, please do so. Okay, so we talked about yesterday this candle here. This candle actually ended up touching the support bottom of what we're in here. This formation is a descending broadening wedge, and we did get that touch to the bottom right here. We were under the impression, based on some indicators, that we could potentially touch the 38-cent level. Unfortunately, we didn't get that, or fortunately for a lot of us. But we did say that this could potentially be the bottom, and also that it's a hammer candle after a downtrend. Usually hammer candles tend to present a pretty bullish case or a reversal signal. The formation that we're in right now is a massive trend reversal signal on its own. So today's print actually ended up printing another what looks like a bullish hammer. Now we can see how it's respecting market geometry here. The Fibonacci retracement here has our not 382 at 56 cents. This is a target that we did call yesterday. That could potentially be where our either the EMA 7, which is the 7-day exponential moving average, or our 10 simple, which is our 10-day simple moving average, could act as some type of resistance before we do continue our path to the top. We did get close enough to the 382, and actually that's something for you guys that are listening to me often. When I give you a target that's specific to a fib level or some type of resistance, oftentimes you'll see momentum traders or day traders take profit just a little bit early so that they can guarantee their position. A lot of the times those positions or those exit strategies are presented with a bit of discretionary trading. So I want to make sure to voice that out loud, and I'll try to remember to voice it as much as I can as we progress with making these videos, so that you guys can make sure to follow what the pros are doing. And I'm actually curious to see what this area here gives us: the opening of the candle, the high, the low, and the close. I'm curious to see if this reached 56. Oh, it did. So if you can take a look right at this area here, our candle did reach the 56-cent level where we were talking about yesterday. Okay, so let's take a look at the notes right here and see what else we got. I want to make sure that we touch on everything. Okay, so I want to talk to you guys about some psychological resistances. First of all, we do have, we're going to touch on all of them right here. So first of all, we do have our zero spot, our not 236 at 52 cents acting as our new form of support, which is a good thing. However, we do have our EMA 7, the 7-day exponential moving average, and the 10-day simple moving average acting as resistance. The toughest one to get over will definitely be the SMA 10, located at about 62 cents, which has some pretty good confluence with our not 618 inverse golden ratio from the Fibonacci retracement tool. This could likely be an area to where we test first. That is, if we can get over the 382 56-cent resistance, and also the EMA 7 57-cent resistance here. We need to get over this and make sure that it can be converted into support before we can make our ascension up to the 0618. This is going to be our toughest area to get out of. Do keep in mind that we are in a bullish formation here. So while it is tough, I mean, we have resistance as these are the forms of resistance right here. This is the psychological effect here. Broadening descending wedge resistance right at the 618. The 618 being the resistance on its own, and also the SMA 10. So there are some obstacles over here to be able to overcome. But in doing so, if we were to break out tomorrow or the following session, we're likely to test the SMA 50, which could land by then at the 0.786, fib ratio at 68 cents, before we retrace to use the 0.618 as a new form of support, thus confirming our new converted resistance, wedge resistance, into support before an upside move. Now, the upside move does have a few targets as well, but the most important targets to keep in mind are right at the golden ratio, the 1.618, which is landing right with our. Let me take the 7 and the 30-day out. If I did mention earlier that it was the. Hold on just a sec, guys. If I did mention earlier that we had some type of resistance here. Oh yeah, right. We were going to touch the SMA 50, I said, but sorry guys, this is the 30-day exponential moving average. This is the EMA 30. So we'd use the EMA 30 before, bouncing back to the 618. So we were gonna potentially drop the EMA 30 down to the 786. And this would be likely the resistance that we would face right in this area here before we come back and test the 0.618 along with our newly converted resistance into support from our descending wedge. Okay, so yeah, the 1.618 is actually our SMA 50. This is our 50-day simple moving average, which is very, very, very tight with confluence, and with the 1.618 at, where are we? 93 cents. Now, this is a resistance range that I talked about yesterday. It's a technical range that I'm able to draw myself. Now, it just so happens that it has pretty close rhyming with the 1.618 and our 2 fib at 54. Is that 54? At our sorry, I couldn't read it. My glasses are off right now. At $1.05. That's 0544. That's what I was looking at. Sorry, you guys. And the next psychological target we have is our SMA 100, which is landing pretty much at our price objective. So whenever descending wedges tend to realize their price objective is actually at the genesis from which the formation began initially. So this is the beginning of the formation, landing at about 123. We have resistance there from the SMA 100, which could potentially be forced up just a tiny little bit before we before we reach it, because there's going to be some chop in order for us to get up to that place. Likely we'll find a resistance range actually using the 2.72. Excuse me, you guys. I drank a lot of water again. So yeah, the resistance range would actually be this. Between the 2.72 at 113 to the 2.618 at 124. The 124 golden ratio here at 2.618 is in direct confluence with our price objective of the formation. All right, anyway, let's go ahead and move on to the next chart. We do have to talk about some RSI here. Okay, so yesterday we also mentioned that we had on the 12-hour chart bullish divergence happening at the very bottom here of our RSI channel. So we have since then started our ascension, and our bullish divergence is actually playing out nicely like we expected. We have moved above the moving average, and now at the very shallow area of the bearish strength percentile. Now I have to repeat this every single time, you guys, just for the new viewers, that this bottom half is the bearish control zone. This top half of the RSI is the bullish control zone. Both of the zones are separated by two areas. The top area here is known as the bear weakness percentile, and this is the bear strength percentile. And inversely, we have the bull weakness and bull strength, still always with the overbought area and the oversold area in the black area surrounding the RSI. Anyway, so yeah, our bullish divergence is happening pretty well. Let's go ahead and load multi-pane, or actually we can just do it right here. So let's take a look at some immediate short-term signals. So, okay, we are on the 30-minute RSI right here, and it is pivoted towards the downside. However, we are getting pretty close to the bullish control, to the bull strength percentile within the bull weakness percentile. Now, this moving average could actually come up, and we could actually use it as a form of support before continuation to the upside. Now, I usually don't like these types of pivots because these pivots actually show no bias in direction. So let's see if we can get a bias in direction in a smaller time frame. Okay, so the 15-minute RSI is looking like we did pierce through inside of the bull strength percentile, and now we have a downside pivot. We may find support within the bull strength right here. If not here, then we're gonna find it within the bull weakness and our moving average, similarly to right here, and like this right here and this right here, similar to those moves like that. Okay, so let's go ahead. I don't like to use the 5-minute, 3-minute, and 1 minute. Those are too, the smaller the time frame, the more grain there is within the trade, the more trash there is to kind of look beyond. So I'm going to go ahead and just keep it at the 15-minute. Let's go to the bi-hourly RSI and see what it's telling us. Bi-hourly is above the moving average. We are now at the shallow zone of the bearish control zone and primed to enter the bullish control zone. So this is suggesting upside by probably mid-session tomorrow. Let's look at the 4-hour. 4-hour is now making its bullish cross over the moving average and moving directly up and trying to get out of the bear weakness percentile. So we are in bear weakness here, so this is likely to continue to the upside. Let's go to the 6-hour RSI and see what we got. Same deal. We got a bullish cross, and now we are coming out of the bear strength into bear weakness, suggesting continuation to the upside. Let's jump a little bit and go to the 12-hour RSI and see what we got. Okay, so the 12-hour RSI we already did look at. This is the one with the bullish divergence. Daily RSI is giving us a similar situation. Actually, this is bullish. I'm sorry. This is a bullish divergence. Yeah, that's right. And a move above the moving average. This is a bullish cross as well. We're still within bear strength here, so we have to make it out of this right here. So we could possibly use the moving average as support and continue our ascension. So let's look at the 3-day. The 3-day is suggesting some downside here in the oversold area, but it does have two drives of bullish divergence as well. The 5-day is very much oversold. It is, it is within the 25 percentile. So reversal of this time frame is it's not going to be, it's going to be soonish. So now, you guys, I am expecting IMBI to have a green day tomorrow, after potentially a small pullback in the beginning. Like I said, please remember the targets that I was talking about. Our biggest target to overcome is going to be the NOT 618 at 63 cents, but we're likely to face some chop at the 382.56 again, and also at the SMA 10, which could potentially be near the NOT 618 at that time. So Yeah, you guys, that is going to do it for the video tonight. If you have any questions, please don't hesitate to reach out to me on Twitter. I have a Discord. I'll make sure to put all the links at the bottom, or below and on the comment section, above the comment section. So, or yeah, comment below to let me know what you think about the analysis and stuff. But let's see, I have nothing else to show you guys. Thank you so much, and I will catch you at the bell. Adios.